Mona, let's turn to you for some reaction and analysis here. Takeaways?
Yeah, absolutely. You know, I think generally what Rick had mentioned is right. I think the markets have priced in a very aggressive Fed. What we may hear from them today is no explicit dovishness. It does not make sense for them to be dovish when inflation has not yet moved. But if they are asked about a 75 basis point rate hike or an intra-meeting rate hike and they don't explicitly endorse it, the market may take that as, on the margin, a slightly dovish reaction as well. So I think they will put their foot on the pedal, but they may not explicitly endorse some of the most aggressive forms of tightening. And I think that's what we'll be watching for to see what their path is going forward and how the markets may react to it.
Jim, Caron, same question to you. What were the big surprises for you here?
Well, you know, I think that the Fed will likely continue to be very, very hawkish, but it seems that the initial statement wasn't overly hawkish. So I think the markets have taken a little bit of a reprieve from that. The one thing that I'll say, though, is that we have to respect the initial conditions. The economy has been strong, and we're coming from a very, very strong footing. The equity markets, for example, have been very, very strong. Now, clearly they've weakened, but we're coming from a very, very strong place. So what it seems to me like is that the markets are still a bit unafraid of the Fed. Now, the only issue that I have with that is that if the Fed wants to use their financial conditions to contain inflation risk, which is what they can do, that's what their policy is designed to do, then I would argue that the markets probably have to go through a little bit more pain before the Fed actually achieves its goal of pushing inflation to the levels that it wants to, and that they're confident that will actually get to that target inflation point. And I don't see that quite yet, so I'm still a little bit nervous about the markets going forward. Today, right now, might be okay, but going down the road, I'm a little bit concerned.
David, why don't you react to what Jim just said? Are the markets insufficiently afraid of the Fed? I think that was one of the takeaways I took there.
No, I think the markets are probably getting this about right. I think the Fed is fundamentally dovish by its nature. They've been squawking like hawks over the last year because inflation's been high. But the reality is, as the economy moves forward through the end of this year into next year, it's going to slow, inflation's going to roll over, and the Fed doesn't want to make the typical mistake of waiting too long and then doing too much and putting the economy into recession. And I think that, Jay Powell at this press conference is going to be asked a lot of questions along the lines of, are you afraid of tipping the economy into recession? I think he's got to reassure people both that we're pretty confident inflation will come down, and no, we're not going to overdo this and put this economy into recession. I think that will be comforting to markets.